Ladies and gentlemen, good day and welcome to Zen Technologies Limited Q4 and FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Mehra. Thank you, and over to you.
Thank you. I would like to welcome everyone and thank you for joining this Q4 FY24 earnings conference call of Zen Technologies Limited. The results and investor updates have been emailed to you and are also available on the stock exchanges. In case anyone does not have a copy of the same, please do write to us and we'll be happy to send it over to you. Today we'll start the call with a brief overview of the performance, which would be followed by the Q&A session. As a disclaimer, I would like to remind you that everything said in this call reflecting any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with the risks and uncertainty that the company faces. These risks and uncertainties are included, but not limited to what we've mentioned in our annual reports, which you'll find on our company website. With that, I'll now hand over the call to Tina Virmani from Motilal Oswal. Over to you, Tina.
Yes, you are.
Good afternoon, everyone. On behalf of Motilal Oswal Financial Services, we welcome you all to Q4 and FY24 earnings call of Zen Technologies. We're pleased to have with us the management team represented by Mr. Ashok Atluri, Chairman and Managing Director, Mr. Afzal Malkani, CFO, and Mr. Shilpa Chaudhary, Whole-Time Director. We will have opening remarks from the management, followed by a Q&A session. Thank you, and over to you, sir.
Hi, good afternoon, everybody. I hope you can hear me.
Yes, sir.
Yeah, dear fellow shareholders and potential shareholders, ladies and gentlemen, good day and thank you for joining us for this Q4 FY24 FY24 earnings call. I'm delighted to share that this has been a year of strong performance for us at Zen Technologies. We have set a new record in sales and profitability. The order wins have been also extraordinary this year, about rupees 1,350 crores. This achievement confirms that our business model focus on developing indigenously designed and developed defense equipment with IP ownership, which are world's leading in their category, was appropriate for current times. And looking ahead, our order book position is surpassing 1,400 crores as on 31st March. And this is positioning us for a sustained growth for FY25. We are not just optimistic but confident in our ability to accelerate our growth trajectory and aiming to exceed a turnover of 900 crores in the current financial year. Again, before I proceed further, I would like to say that for the current year, we had made a projection of 450 crores. In fact, that was also a tone down. Initially, we had said between 450, 500 crores, but later we said it will be 450 crores. But we achieved only 430 crores on standalone basis. It's about 5%, and for that, I have nothing to say, but I may offer an unqualified apology. We shouldn't have fallen short, but I think we made our best attempt, but we couldn't reach. But the fact is that we did not achieve the target that we gave, and apologies for that. And another point was that, we have been saying on many occasions that, 35% will be the EBITDA margin that we are expecting, and 25 the PAT margin that we are expecting. But somehow some shareholders have expectation that it will be much, much more than that. But, I really want to temper those expectations, especially, given the vast product mix that we have, and especially for some highly commercial, dual-use commercial simulators, we have the cost of production as a little higher than the regular ones. So we do again assure you that 35% EBITDA and 25% PAT is something we'll be able to achieve even in the current financial year. We also expect some more order wins during the year to further accelerate our growth. We are very optimistic about not only the domestic but also the export market, and we are actively exploring new opportunities in this area. As we move forward, we are confident that our strategic investments, especially in R&D and existing acquisition and future acquisition, will be very good for the growth of the company, and we will continue to get positive outcomes for Zen Technologies. So with this, I will pass it on to Tina, and for the Q&A moderation.
We will now open the floor for Q&A. Participants who have a question can raise their hand or put a question in the chat box.
Yes, I'll announce that as well. Ladies and gentlemen, to ask a question, please click on the Q&A tab on the panel and click on Raise Hand button. The operator will announce your name when it is your turn to ask a question. Please accept the prompt on your screen and unmute your microphone. You may also post your text questions on the QA panel. We will wait for a moment while the question queue assembles. We'll take a first question from the line of Deepen Vakil from Incred Equities. Please go ahead.
Hello, am I audible?
Yes.
Yeah. So first of all, so my first question is on the lines of, sir, our inventory days have risen significantly, and so has our net working capital days. So, sir, I just wanted to understand is if this is going to be a sustainable one going ahead, or how do we expect our receivable days?
I'll let Afzal answer this question.
Yeah, sure, sir. So if you see our working capital cycle, total number of days on the basis of 31st March 2024 is 148 days. As we, in earlier guidance also, in earlier call also, we have given a guidance of around 130 to 150 days. So our working capital cycle is 148 days. Just for example, our receivable days are 143 days. Our inventory days are 113 days, and advance to supplier of raw material is around 60 days. So total of all these three items is 316 days. Less payables are around 22 days. And one important thing which you are missing is advance received from the customers is around 146 days. So if we reduce these two things, payables and advance received from the customers, then total number of total working capital days is coming at 148 days. That we would say that this is sustainable. Going forward also, our working capital cycle will be in the range of 140 to 160 days. This is number one. And number two, why this number of days have increased, that our receivable is 143 days is on a higher side because of the higher sales in Q4 24. In absolute terms, our receivable are 169 crores, and our turnover for the last quarter, if you see, then it is 136 crores. And again, our receivable are increased by 156%, but simultaneously our turnover have also increased by 167%. Number two, regarding this inventory, then inventory have increased from rupees 41 crores to 133 crores. But so in percentage terms, inventory have increased by 224%, but again, our turnover have increased by 167%. So in terms of the number of days, it has increased, but again, we need to execute our orders in the current year budget target numbers. We have built up the inventory. If we don't build the inventory, then we would not be able to achieve our target number for the current financial year. So, but in nutshell, to answer your questions, yes, our working capital cycle is 148 days, and going forward also, it will be in the range of 140 to 160 days.
Got it, sir. Thank you so much for the detailed explanation. So, second on the strategic investment side, so I have two parts. One is what do you expect to spend on R&D for FY25, and also any inorganic acquisition planned? So you had already sought some approvals, shareholder approvals in the form of a QIP. So any update on that as to if we are still exploring any inorganic acquisition, and in which area we would be looking at?
So FY25, the R&D we are expecting to be in the tune of around 30 crores. But again, you should not hold me to it, because we are a very opportunistically investment R&D company. If we get a good product idea and the customer suggests that you invest in this, we will not hesitate to invest in that little more than what we have budgeted. So that is one. The second, with respect to inorganic acquisition, we have taken permission to raise up to, place up to the 1,000 crores, but we have not yet identified any target. And when and if the things become clear, we may raise the the we may go for the QIP. But as of now, we have, it's a just enabling provision which will allow us to go and raise this money.
Okay, got it, sir. So, last question, sir. How do we see exports shaping up for, say, in the near future, say in FY25 and 26? So, right now, and where do you see the most traction coming in for our products, mainly anti-defense, anti-drone systems?
So, I think the out of the 1,400 crore that we have, almost 400 plus crores are for exports. And that, so I think probably out of the 900 crores, maybe at least 33%, 30% maybe exports that is one thing. And the second would be, what was the second question? Sorry, I missed that.
Sir, second question was on the line of as to how do we expect so exports shaping up for in the
So,
anti-drone system. Sorry, anti-drone system.
that's
About the anti-drone system.
Yeah, so anti-drone systems, there is huge demand, even both domestically and internationally. We expect that to scale up significantly. Again, remember that two things the country, every country in the world is worried about. One, there may be a war knocking on my door, and for that I need to be prepared. It doesn't matter how much advanced equipment you have, because they have seen in Ukraine, the world has gifted with them with the latest equipment, but they are losing the war simply because they are not trained. So training has become an area of focus. And the second is, the war has moved, there is a tectonic shift, or almost as much as from sword fighting to gun fighting. There is the drones have taken over the warfare completely. Now you need anti-drones to protect yourselves against these drones. And India and Zen is offering those drone systems. So keeping these two things, the preparedness and the emerging threat, both the solutions are available with Zen Technologies, and we are at a very, very sweet spot. And we expect a lot of inquiries as we are dealing, a lot of inquiries coming in, we can feel it. And we think that there will be tremendous growth in the export area from on both these fronts.
Got it, sir. Thank you so much for answering my question, and all the very best for FY25.
Thank you. Thank you, Dipen.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, please restrict yourself to two questions at a time. You may join back the queue for follow-up questions. We'll take a next question from the line of Abhishek Shah from Ambit. Please go ahead. Mr. Abhishek Shah?
Hi, am I audible?
Yes.
Yes, am I audible?
Yes, we
Yes,
can hear you.
good
Please go
afternoon,
ahead.
sir, and congratulations on a good quarter. Just continuing on the export question, I've seen in Q4 actually we had at least what was reported on a standalone basis, nothing on the exports. So, any particular reason for that, and how do we see that shaping going forward?
So in the Q4, the exports, we didn't do any exports in the Q4 actually. That's why we did not report anything. There were no exports in Q4. All the sales were domestic sales. So, but I think in the forthcoming quarters, you will see significant export figures coming.
Okay, and so does that have any impact? I know that you've always guided for 35% margins, and that's what we've come in. But does the share of exports have any bearing on the margins?
Yeah, it does. I mean, you're right. I mean, you actually hit the right spot. Actually, we have better margins in exports than in domestic. So that has definitely impacted the margin mix. Yeah.
Okay, so and one last question, just in terms of, we've always stated that, we are going to remain focused on simulation and, anti-drone. Anything in terms of what we are planning for product, new pipeline, or anything that is in the works that you could share with
Yeah,
us?
so we are going to announce in the next few months, weeks and months, some new product, very interesting range of products, and that should I think the end users not only in India but worldwide will find them very interesting, And we personally think that they're quite path breaking. So let us just hope for. So there are some formalities to be completed with them before we can actually reveal them. So we are just hoping to complete them and then come back to the customers and show them what we have.
Sure. Great. Thank you so much, sir, and good luck for FY25.
Thanks, Abhishek. Thank you so much.
Thank you. We'll take a next question from the line of Parikshit Kabra from PKD Advisors LLP. Please go ahead.
Hi,
Mr.
I hope
Kabra?
I'm audible.
Yes, please go ahead.
Great. Thank you so much for taking the question and congratulations on a great set of results, sir. I wanted to understand, of course, you have guided in the past that the orders come in when they do, right? They come in lump sums, and so you cannot look at it quarter on quarter. And for FY25, we are quite comfortable with the order books to hit our 900 crore target. But now the subsequent year has started and we need to start thinking about FY26. So within this year, when do you think we should start being able to see the order inflows actually materializing?
So our impression is that we will be in the majority of the order will start will come in the fourth quarter, but they'll start in the third quarter, coming in the third quarter. But even I would not be surprised that the smaller orders start coming in the second quarter itself. So but we again, what we are thinking is, even if we execute 900 crores worth of orders, we expect it to be replenished between 12 to 1300 crores, so that next year we have certain internal targets, so we'll be able to achieve that target is what our expectation is.
Sorry, so just to be clear, the order inflows, you're expecting the bulk of them to start coming in Q3, Q4 of this year, and you are hoping for a target of about 1200, 1300 crores of order inflow.
That is right. I mean to say, we'll be executing 900 plus, and the rest will, we expect to 12 to 1300 crores worth of orders coming in. Yeah.
Got
so we
it,
replenish it. More than 33% we should be having. Yeah.
Got it. And this guidance of, not guidance, but this target of 50% or whatever, 1200, 1300 crores, does this include the new product lines that you are hoping to launch, or is this only for the existing two lines?
This is only for the existing products. Anything else happens, it will be icing on the cake.
Got it. And these new products, are they sub-products of your existing lines? For example, are they new simulators, or is it a completely different line altogether?
No, they're not really completely different line. They're actually, they will enhance the attractiveness of our existing products, or they may be for adjacent markets. So these are the two things that may happen. That for example, we are already selling anti-drone systems. There may be something that we may add to that, which will make it very attractive, the product itself. It may be like that, or it may be a product for adjacent market. Yeah.
Got it. So the revenue would be part of one of these two product lines itself. Any addition?
Yes, it will be enhanced. The revenues will be enhanced. I think we may get more orders on that equipment because of that. Yeah.
Got it, sir. I'll come back in the queue since I've exhausted two questions. Thank you.
Sure, Parikshit.
Thank you. We'll take a next question from Hiral Nandu from Kalpuruksh Capital. Please go ahead. Mr. Hiral Nandu, please go ahead with your question. Please unmute your line.
Am I audible now?
Yes, please go ahead.
Congratulations for the good set of numbers. Just a couple of questions. One is that we see some material cost has increased compared to the previous quarters in Q4. So can you put some light on that any particular raw material cost has increased, or it was one of the quarter where we see a material cost increase, or it will stabilize near this range only?
Yeah, so I think this is a product mix. As I was saying, that when we have a dual use simulator, for example, truck simulators, etc., we have and they're easier to make. Very frankly, you don't need much R&D to make those kind of products, and they have both military and civilian use. There, the competition is more, and typically our raw material cost is also more. But for products with very high technology, like some simulators that we have, the cost below is much lower. So depending on the product mix,
I'm
the
sorry, sir, your
material cost
voice
will be
is
higher or lower.
okay. Go ahead, please.
So depending on the product mix, the material cost will vary. That answer to your question. I hope that satisfies.
Okay, thank you. And the second question is, that I see some current liability of other current liability of 205 crore odd. If you can just put some light, what is it about that 205 crore? Last year, I think it was 100 crore odd, and recently it is
Yeah,
200.
I let Afzal answer that. Afzal Malkani.
Yeah, sure, sure. So out of this 205 crore rupees, 173 crore rupees is advance received from the customers, and 28 crore rupees GST payable for the month of March, for which due date is 28 April. So 173 plus 28, so it's almost 201 crore rupees, and 3 to 4 crore rupees is miscellaneous. So total is around 205 crores.
Okay, okay. The last question, there is an insurance claim we received around 4.4 crore against 6.57 crore or something. So that is the full and final settlement, I think, what we understand. So there is a, I think, loss, or we have received 2.15 crore less, right, for the insurance claim, and we have already booked that loss in the March 24, or if you can put some light on that.
Afzal, go ahead.
Yes, sir. So this was the claim we raised in November 2021 for 6.56 crore rupees. At that time itself, we book our entire loss actually. Okay, 6.56 crore rupees. After that, now we received 4.4 crore rupees. So remaining 2.16 crore rupees was due to the reason that we put up the claim on the basis of the market value of the product, and insurance company agreed with this cost price of the product. And second is, as per rules, 5% salvage value we have to bear, and 2% is another things is adjustment. So considering all these things, we received whatever was our expenditure we incurred actually. Only the difference this insurance company has deducted is this difference between this market value and cost price. So but entire things was debited in 2021 itself.
Perfect. So this entire 4.4 crore is a current year's other income, or is a part of current
Yes.
year's other income, right? Okay.
Yes.
Okay. Great, great. Congratulations and all the best for the next year.
Thank you.
Thank you. We'll take our next question from Anurag Agrawal from Agrawal Analytical Investments. Please go ahead.
Um, Hi, sir. Congratulations on the amazing result. So my question is pertaining to, we recently had done participated in an exhibition in Middle East. How were our products received? What kind of reaction did you get? Do we see an increased demand from that country? Like, could you just throw in some light about that?
Exhibition, we received very positive response, and very a robust demand is was seen there, and that is one of the reasons after visiting there we had a lot of requests for collaboration and developing the product in the. We went for this World Defense Show in Saudi Arabia. So yes, we think that it has really validated our belief that that there is a lot of demand for both the training equipment and the anti-drone systems. So yeah, and we do expect a lot of demand forthcoming from that Middle East region as we speak. We are actually talking to a lot of customers there. Yeah, thank you, Anurag, for
Okay.
asking that question. Yeah.
Okay, and the second question pertaining to the new product that we are developing. Uh, you mentioned that it is an add-on feature or something related to which will add value to our current existing product lines. Uh, Could you throw in some light relating to what could be the market size for that particular product? Like how big that could be?
So, I would just say that it will make our existing products more attractive, which are the add-on products. There are some new products also, but in this case, I think the we will have an unbeatable combination in anti-drone systems and the simulator. So, I think I would not be able to attribute how much by itself. There is nothing, but there will be generating cumulative demand for the products that we already have.
Got it. Got it. Apart from that last question, sir, how do you see the competition faring up in anti-drone system globally? Also, like we recently went to the exhibition, we must have seen other competitors as well.
So globally, we do see, we have good competition. I think there are other countries also that are doing a good job, but customers are liking our system, and so we are in talks with a lot of countries that are wanting our systems. And there are some people who have different requirements. They're going to different products. Domestically also, we think that we stand a good chance. Again, in simulators, not much investment has gone from our competition, so there is not real tough competition there. But anti-drone systems, of course, DRDO has the technology, so they have been transferring it to other companies. So there is some competition there, especially because DRDO is also a formidable organization with good R&D capability. Only thing, we are more nimble, we are adding more features, we are evolving much faster, and we think that we by product to product, if you compare, I think Zen is a little advanced than the competition. So we hope that in domestically also we'll be winning a very good number of orders, and exports also there will be good orders coming in the future.
Got it. So last small follow-up question on that DRDO part. In one of the previous calls, you had mentioned that any sale that DRDO also does would somehow benefit you. There was some commercial agreement to that angle. So could you throw some light on that?
No, it's. I mean to say, the DRDO, the product developed by DRDO, which is sold by Bell and other TOT partners. So we supply a couple of components through our subsidiary. So subsidiary has developed those components and they supply to whoever TOT partner. So every time somebody sells something, we do get, our subsidiary does get some revenue out of that.
Got it. Got it. Thank you so much, sir.
Yeah, welcome.
Thank you. We'll take our next question from Gautam Rathi from CWC. Please go ahead.
Hello, Mr. Atluri. This is Nishit from CWC. Just on your slide 10 of your presentation, there is this mention of evaluating tie-ups with OEMs. Has there been any kind of a development on that part, and any kind of color that you can provide out there?
Yeah, we have been tying up with some OEMs, and only thing is, officially we would like to announce with their consent at the right time. But yes, with the Made in India coming up in a big way, I think in the next 5 to 10 years, most of the system will be bought from Indian OEMs, and so we are partnering with them to develop their simulators also. And you are absolutely right that some tie-ups have been done, but officially we will be announcing once we sign on the dotted page. Together we'll announce that to the stakeholders.
So is my understanding correct that you've made certain tie-ups, but you're awaiting clarifications or you're awaiting final consent
Yeah,
to?
there is some understanding, but we haven't signed the documents to make it public. So once we sign it, we'll make it public. Yeah.
Understood. That is fair. That's all from my side.
Thank you. We'll take the next question from Tej Patel from Niveshaay. Please go ahead.
Am I audible?
Yes.
So, sir, you said that we are expecting around.
You're not very clear, Mr. Patel.
Hello. Is it better right now?
There's a little disturbance coming from your line.
Uh,
Can you try to speak louder, please?
Now is it audible?
Yes, please go ahead.
Yeah. So I was saying, sir, you said that we are expecting inflow of around 1,200 to 1,300 odd crores, and we have a target of achieving revenue of 900 odd crores in the next financial year. So I mean, what are the key areas of growth that we are expecting, and is there a major government policy you see coming in that?
So, is your question over, or is there still left something?
No. It's over.
So this year we are saying 900 crores, Tej, and out of this 900 crores, we are saying that this is based on the existing order book position that we have, and we have some internal growth targets. To achieve that, we would need in the third or the fourth quarter, new order inflows of about 1,200 crores. That's what I said, and we seem reasonably confident. And it is on again the two areas that we are talking about: anti-drone systems and training simulators, cumulatively for both exports and domestic. So that is what I wanted. I meant when I said that we will need 1,200 crores to maintain growth rate.
Mr. Patel?
Okay. Yeah, got it.
Thank you. We'll take the next question from Palak Bhanushali from MIV. Please go ahead.
Hi, sir. Good afternoon. Am I audible?
Yes.
So I have just one question that during the quarter, our gross margins were impacted due to, as mentioned on the call, due to the spike in the raw material of some of our products. So I just want to understand that all our order book is a fixed price contract, or do they have a pass through mechanism clause in our contract so that with the commodity price rise, we can actually adjust a final price of the products? And another thing that between the simulators and the anti-drone, is there marginal difference? And can you please quantify the difference if it is there?
So to your first question, that it's a fixed price contract. We don't have any pass-through mechanism for that, because again our raw material costs are, especially the metal, those costs that vary are not that significant. So so typically the government and all the army contracts are typically fixed price contracts. So that is the first question. And with respect to anti-drone systems and simulators, we have lesser margins in anti-drone system compared to simulators. Simulators have larger markets, and when you look at the domestic workers exports have larger margins than domestic market.
Can you quantify the difference in the margins if it is possible for you?
So again, as I said, simulator varies very very widely. In a worst case, the bill of material can go as high as 50%, but typically most of the raw material costs are between 15 to 35%. And in the case of the anti-drone systems, they are typically around 35%. And yeah, so that's the approximate ballpark for you.
Okay, understood. Another question I have is that during the year we guided for 450 crores of revenue. We delivered slight below that. So what were the challenges that we faced during the quarter of for the year that we were not able to achieve the guidance?
So I think we had some this issue in Chennai. There were floods were there, because of which some of our supply chain got impacted, and that was one of the causes. But there was some supply chain related issue, but now they have been resolved, and I think this year is going to be much better than the last year challenges that we faced.
Okay, sir. Understood. Thank you.
Thank you.
Thank you. The next question is from Prathamesh Devar from Tiger Assets. Please go ahead.
Yes, sir, just wanted to know on the revenue side. I think you have given some target of 2000 crores by FY27. Is it right, sir?
So yeah, we have said that there will be a CAGR of 50% from next year. Also, FY27 will be 2,000 crores. That's right.
Okay, and the export contribution will be around 33-35%, right?
Yeah, about 35%. That's what we
Okay,
expect.
that's it from my side, sir. Thank you.
Thank you. The next question is from Ayush Didwani, an individual investor. Please go ahead.
Yes. Am I audible?
Yes.
Hello? Yeah.
Yes, please go ahead.
I had a question regarding the order book that you seem to be exhausting at least 70% of your order book at the start of the fiscal. Even the last fiscal, you executed at least 100, executed more than 100% that you reported in April 23, the order book. So my question was that when will we as investors see a 2 years stability that you won't face a order issue? Because half the questions are coming on orders.
So I get your point. The thing is, we are able to, through extraordinary supply chain reconfiguration, people typically take 3 years to execute the order. We have been executing them in 12 months to 18 months. So that's a plus point about it. And the second, so we will be, so for you to see a 3-year visibility of orders is actually a challenging. So that means to say we will have to actually slow the order execution, which we don't want to do.
So,
So we
so,
want but
so
today's money is better than tomorrow's money. So we will
no, I'm
be.
sure. But then, what the growth you guided for, you will have to seriously like take orders at a higher pace in the next say 2-3 years.
So it's more than we taking Ayush. The orders will come. The demand is increasing exponentially for these products. So we are almost
Because if
passively
I
sitting.
because if I see this year also like 2/3 your order book will be executed.
That's right. Yeah, I mean absolutely.
So the orders you don't foresee a problem. I mean they will keep coming to
So
sustain
based
the
on
growth.
what we have, what we are based on our discussion and our pipeline at this point in time, I think it will be. It should not be very difficult. I think it's going to be pretty easy.
That's it from my side. Okay, okay,
Thank you, Ayush.
okay,
Thank you.
okay. Thanks.
Thank you. The next question is from Rudresh Kalyani from Kalyani Private Business. Please go ahead. Mr. Rudresh Kalyani.
Hi, good evening, sir. Hope I am audible.
Yes, please go ahead.
Yeah, I got to know about you via the on the shop floor program of Bharat Shakti. The podcast was very insightful. So, coming to the questions, I got few of them. Most of the defense work on the secrecy and confidentiality. How will you maintain it when we outsource the manufacturing to third party?
So by the way, all the defense companies, including the very very big names, Bell, BDL, they all outsource it to their supply chain. But your question is valid in the sense, how all these defense company maintain the confidentiality. So typically, one thing, Rudresh, is that the products that we make, we have 80 vendors. So what do we give to them for manufacturing? The hardware part, for example, the mechanical, the electronics, and but the software, the heart of any system is actually retained with us, which we pour in the last time when we are assembling it. Till then, nobody knows about the software. So what is going is some fraction part of the product, some component or some subsystem that is finally integrated at our place, and then it becomes a meaningful product. So people who are actually making a component just cannot design the whole product by themselves. So that is what. So it's pretty safe and it is pretty proven. We have been in this field for 30 years, and even the vendors with whom we are there, we have a good relationship. So that risk is almost non-existent.
Okay. Coming to my second question, so can we leverage our skill in the simulators to build them for any other domain, just like we did for the healthcare? Can we do the same thing for the, let's say, sports or something like that?
So actually, so we have done this, one was the medical care, and earlier we had also done for a game development. We spent almost $1 million, and our experience is that has been very bad, very poor, and we have not made any progress in both the cases. What the insight that has come to us is, listen, this is the value chain that we have created is created specifically to cater to the needs, simulation and anti-drone needs of the armed forces, both in India and overseas. And the moment we try to shift our focus, it's very very difficult for us. We don't have, so we see, but in this area, no, it's very very difficult to compete with Zen because we have extraordinary strengths. But to get into sports or into medical devices or into games is something that we would be very very cautious about. I'm not saying never say never, as they say. I'm not saying that we'll never do that, but I think we'll be very very cautious about going in that diversifying into those fields.
Okay. And my third question is, what is the end goal? Leaving behind the number, let's say 5 years, 5 year, 10 years down the line.
So we are, I mean, as somebody said, FY27 is going to be 2000. Let us see. I mean, that's a very very aggressive goal. They have already given us. So but the overall, Rudresh, the thing is, we are, even though we are talking as financial stakeholders, we are talking about numbers. What Zen wants to do is leave a legacy, of that Zen was contributed in a meaningful way to the country's self-reliance goals. That we have developed not only products to which serve the Indian armed forces, but we have exported from us and created a net export capability within the country. So that is the goal that we have in the long term. I think that inspirational goal will actually, probably take, again, when you look at Elon Musk, what does Elon Musk say? So he's the inspiration for, me at least personally. Elon Musk says that, there is a possibility that Earth can be destroyed by, nuclear war or, a meteor hitting. And he says, listen, if it is destroyed, we want to preserve the human consciousness. How do I preserve human consciousness? I have to colonize some new planet. And which is that planet? That is Mars. And the only planet that's colonizable is Mars. But if you want to colonize Mars, I have to build rockets. And he's building rockets from that. So, our vision should be arcing, extraordinary and exciting. So that way, our Zen's goal is, how do we make India completely self-reliant in defense field? So we are doing our bit in contributing, and we are helping other companies which are into IP. I'm not much into this production and TOT kind of a thing, unless the company can absorb it. Many times people just get the technology and they don't care whether it's absorbed or not. They just manufacture and push it to almost box pusher kind of thing. So we really need to focus on creating great companies within India for self-reliance. Zen is such a great, such a kind of a company, and we hope that in the next 5 to 10 years we can make a reasonable impact on self-reliance goals in the country.
Okay. My final question is, uh, can our anti-drone system neutralize the stealth drones?
So, we have whatever. So there is a set of drones that have been we have tested, including the so-called drones that cannot be detected, but we have been able to detect them through various methods and been able to neutralize them. But this is an evolving field, Rudresh. By the time I am saying, listen, we can detect these drones, somebody else has manufactured some new drone with new technology, and we are trying to improve the technology to detect those drones. So this cat and mouse game keeps going on. One-upmanship keeps going on this, and that is the precise reason the government of India is saying, listen, this technology has to be developed in India, because tomorrow a new threat comes. I don't want to go running to a foreign country and say, boss, the new threat has come, help me now. So they can actually dictate us, guys, this is a threat, please give a solution to this. So that is the precise reason that IDDM is a category that is the most sacred and most important, and it should be the most encouraged category, so that we have these capabilities within the country. And not only that, we will be able to help other friendly countries with this technology.
Thank you. All the best.
Thank you, Rudresh.
Thank you. The next question is from Rohit Ohri from Progressive Shares. Please go ahead.
Hi, sir. I've got two questions. Am I audible?
Yes, please go ahead.
Yes. So two questions. The first, we made some investments in a company called AI Turing Technologies. And what sort of
Mr. Ohri,
market
sorry, your
size or
voice is
demand do you
muffled.
see? And what is the exact intention of? Am I audible now?
Yes. Can you please repeat your question? Mr.
I
Ohri?
was asking about the investments made in AI Turing Technologies.
Yeah, Mr. Ori, so I'll answer your question to the extent that I've understood. Yeah, AI Turing, the thing is, we were looking for completing the anti-drone product, because the product has typically the detector, the radar, the camera, the jammer, and the command and control center. Of course, for it also requires interface with the hard kill thing. But in this, the camera was something that we thought will be available easily off the shelf. And when we started, and we actually ordered to come with a couple of guys, but the did not come. And there was a lot of pressure from the customer that, where is our anti-drone system? And that's when AI Turing came up to us, and they offered a solution which was much better, easily integrated. It was a camera solution, electronic optics, and and it worked very well with our system. And the others we were struggling to deliver a system that we wanted. So when we looked at them, and they are offered it at a fantabulous price. So we basically wanted to get that camera that they are supplying and integrate with our system, and they were giving it a price that was very reasonable. And we thought we have to protect their bandwidth, because they were doing too many things, and they were a little stressed for money. So we invested in them so that we can preserve this anti-drone system as a complete product in terms of the electronic optics also. We become a one point source for that. So that was the reason we invested in that company. But that company is doing some other stuff also, exciting stuff, that we'll take a call on that as and when the products are ready. We'll definitely share with you.
Mr. Ori?
Part of
Mr. Ori, does that answer your question?
so do you think that this will become a substantial proportion of your revenue going forward? I have a
No,
follow-up on that.
yeah, please go ahead.
So that was the question. That it can mitigate the issues of lumpiness of the business.
No, so the thing is, very frankly, I mean, we have always said that the quarters will tend to be lumpy, while years may not be lumpy. Yearly growth is almost assured, but lumpiness in the quarters may be there. So yeah, all the long-term shareholders in Zen are prepared for the lumpiness in the quarter, as long as the year-on-year growth is at least predictable and we can focus. So yeah, to your question, is lumpiness completely eliminated? No, the answer is no. There may be some lumpiness, but even though I don't foresee me in the near future, but definitely given the nature of our business, some quarters in the future will be lumpy.
Thank you. We'll take the next question from P. Krishna, an individual investor. Please go ahead.
Hi, sir. Is it audible, sir?
Yes, please go ahead.
Sir, best wishes for your national interest. Sir, my first question is regarding the anti-drone market of ship, airport, refineries, steel. Is our anti-drone capable, deployable in the ship, airport, refineries?
Yeah, we can deploy them on the ship, airport, steel, refineries, monuments, VIP protection, assemblies, and installations. But the point here is, Krishna, we should be aware that again, my value chain is fully tailor-made for armed forces. Where do I get a guy to go and market to the refineries? Where do I get the ability to go and I know how a refinery will buy one of the anti-drone systems. So what I'm saying is I'm not averse to selling. But number one, to your first question, yes, our product will suffice for their needs. To your second question, what are we doing about it? If somebody comes and buys from us, here is the check, take the money and give us the system, we are willing to do that. But this is a new market. We really don't want to push into that. Again, it's a very, very fragmented market. It's not as big as the defense market. So we are focusing on the armed forces market. But if these orders come to us, we will definitely supply to them against payment. So we don't have any resistance to that. But do you have a marketing team? Are you creating a value chain to support this? No, we are not creating a value chain to support this, because we are not
Okay.
sure about the market. Yeah.
Okay. Sir, how much our current anti-drone range capability, sir, in terms of distance, our capability?
It's about 10 kilometers.
Sir, some lights on Zen Medical Technologies Private Limited subsidiary, sir. Because I have read a lot of conference call. You have not said about that. What is any future plan? Something like
So,
that.
I mean to say that, actually there is no activity happened in the last year in medical devices. I don't foresee anything happening in that medical devices in the near future. But if there is some development in the medical simulation field or something like that, we will update you. But very frankly, I think the medical devices business doesn't look very promising at this point in time.
Thank you. We'll take a text question from Ish Mohit Arora from SOIC Research. What is the order pipeline that we have? When are we expecting new orders to come in? For FY26 guidance to be met, we need minimum 900 to 1000 plus crores of order wins. How confident are we? Which new products are we launching?
So, with respect to the order book, we know we have given the figure that is 1400 crores. And with regards to the existing, the order pipeline that we have, which we think with the high probability that we will win, is about 900 crores. Already we are working on 900 crores worth of orders. There are very, very large projects that we are not talking about, which will significantly improve the revenue for us. And the probability of those orders also coming up very, very good. But but they are not, they're in very, very drawing board stage. So, but we eventually think that they will come. So yes, we to your question, we feel confident that we will be able to replenish 900 another 300 crores worth of thing. Our target is around 1,200 crores of replenishment. We expect that to happen by the fourth quarter.
Thank you. We have one more text question from Deepak Sharma, an individual investor. Hi, sir. Congratulations on such a good number. My question is, there is a dip in QOQ operating profit margin and YOY basis too. Also, there is 33.3% material cost versus 20 to 26% trend in last some quarter. Why the such rise in the material cost and what you're expecting the operating cost in the next 1 or 2 quarters?
Mr. Malkani will answer that.
Yeah, sure, sir. So there are two things. One is that the margin is depends on the product mix, as we discussed in one of the earlier questions. That and second is when we achieve the scale of operations, then we cannot maintain the same kind of raw material cost of 25 to 27%. Last year, our total revenue was around 160 crores, and we achieved the scale of operations, and with a growth of 167%, it is a 430 crore rupees revenue. Number three, that the proportion of AMC business is not increasing simultaneously in the same proportion of the equipment cost. So considering these three factors, that we understand that this raw material cost will be around in the range of 35 to 40%. At least we need to consider on that.
Thank you. We'll take one more question from Sanjeev Panda, an individual investor. Sir, as you're guiding for 35% EBITDA margin, in terms of margin, would you be able to give us a sense of margin for training simulation equipment and what range for counter drone solutions? And second question is on acquisition we are looking at, is it to expand market or gain technology?
Afzal, you may answer this.
Yeah. So first question is regarding the margin. We can consider that on an average we are saying 35% as a EBITDA margin. Here, if we want to differentiate, then as we mentioned, in simulators it is a little bit on a higher side. In that case, you can consider 40% from the simulators average and 30% from the anti-drone. So overall average is coming at 35%. And what is your second question? Can you repeat?
I'll repeat, sir. On
Yeah.
acquisition we are looking at, is it to expand market or gain technology?
I'll answer that. So we are
Sure,
looking
sure.
to gain market and acquire technology. Both will happen in this case.
Thank you, sir. We'll take one more question from Panay Khata from Pink Wealth Advisory. Hi, sir. Wanted to know out of 1400 crores, how much of the order book is from the government?
Yeah, I think or completely, it is completely from the government, either Indian government or foreign government. Almost everything is from the government. So there's no private orders in this. Almost no private orders in this. Thank you so much.
Thank you, sir. Ladies and gentlemen, we'll take that as last question for today. I now hand over the conference to Mr. Ashok Atluri for closing comments. Over to you, sir.
Yes, thank you so much. In conclusion, I want to say that we have never felt so confident about the company ever before, and we think the path to growth is very visible to us, even though we are not able to show how FY26 will do, how FY27. But internally, we know what kind of things are happening at the ground level, and we thank you, for all this 23 years you have been with us. We really appreciate, especially the old time and existing shareholders. We think the inflection point has come. I keep giving example of the Chinese bamboo tree that 5 years grows underground. In the fifth or sixth year, it grows 80 feet. I think that time, the hyper growth time has come to us, and we want you to continue this journey with us and look forward to very, very exciting times ahead. Thank you so much, everyone.
Thank you, sir. Ladies and gentlemen, thank you for your participation. You may now click on exit meeting to disconnect.